Hello guys, welcome back to my channel. Good morning, good afternoon, good evening, anytime you're watching this video. My name is Rosemary and I'm here to talk about something educative, something that will urge you to know more about our financial institution and sectors that we have here in Nigeria. First off, to give you a brief history of how I know the things I'm about to talk to you about, I worked with a financial consultant for 13 years, 13 good years, where I work as a financial forensic auditor. Although I read accounting, but this part of forensic auditing was not taught in schools, in universities. So I I tend to come here to share more light on the forensic part of auditing. I think it would be nice to share my experience and also shed some light in some certain things we tend to ignore in our financial institutions in Nigeria. Disclaimer, if you're a bank official, if you work in the bank, I'm not here to say or talk a bad thing about the bank. No. Rather, I'm here to educate people on things they ought to know and do when they tend to obtain facilities or when they tend to approach any financial institutions on anything pertaining banking. And also I'm here to teach people on the forensic auditing part. I don't think they teach this in universities, but if they do, fine. But I'm here to shed a little light on the forensic audit part. But first, I would like to talk about the types and the difference between the different types of institution we have here in Nigeria. So please do me well to subscribe to my channel, like, share, and drop a comment on this video. And also feel free to ask me any question and I will be glad to provide an answer if I know the answers to the question. Thank you. Let's dive right into this video. When you see my eyes go left, right, center, I'm trying to look at the notes I jotted down because I'll be reading some things from the notes. So please bear with me. We have different types of financial institutions in Nigeria, yeah, which is supervised by CBN. Number one, we have the merchant bank, we have the commercial bank, we have the microfinance bank, we have the mortgage bank, we have the bureau de change, we have the development finance institute, we have the finance companies, we have the non-interest bank, we have the payment service bank, we have the mobile money operators, we have the discount housing, and we have the holding companies, which make them 12 different types of financial institution that we have here in Nigeria. I'm going to talk about four primary ones which we all know of, which is the commercial bank, the merchant bank, the microfinance bank, and the mortgage institute. According to the CBN website, before the banks were merged together, we had 89 legal banks in Nigeria before banking consolidation in Nigeria, which brings us to 24 commercial banks currently in Nigeria. Then we have 6 merchant banks, 719 microfinance banks, and 32 primary mortgage institutes. These are what we have currently in Nigeria. The main aspect of this video is not really about the banks, the type of bank we have in Nigeria. No.
The main aim of this video is to educate people
about who obtain facilities from bank. First off, let me explain something. We have different type of credit facilities which the bank issues to a customer in Nigeria. We have a lot of them, but I would mention few. We have the overdrafts, which is always referred as an OD. We have a revolving credit. We have the term loan. and we have a letter of credit. We have so many of them, but I just want to mention these few. So let's talk about the loan. There are two major types of loans. One, the secured loan. Two, the unsecured loan. Okay, let me explain. A secured loan is a loan which the borrower pledged assets, for example, properties, movable assets, as a collateral for the loan. The assets are always worth more than the amount of the loan and can be claimed by the lender if the borrower do not pay back the money according to the agreed terms and
Types
conditions.
of secured loans.
Term loan is a loan granted by a bank and other financial institution for a specific amount and the repayment terms, which as well as follows a fluctuating interest rate. Mortgage loan. This loan is granted by the banks and other financial institutes for a purpose of real estate, usually with specific interest rates and repayment period. An unsecured loan is a loan which the borrower does not pledge any assets or collateral for the loan. This type of loan is more risk for the lender. Hence, the interest rates are usually higher than secured loans. Example of unsecured loans are credit card and personal card loans. It's important to note that whatever type of loans, terms and conditions are very important. A borrower must fully understand the terms and conditions, therefore, before signing up for any loans. But a businessman nowadays will just go ahead and sign, all because he or she needs the money, and at the end, it will be very difficult to pay back the loan. You don't need to do that. You need to go through the terms and conditions, guides that loan, before signing. Because once you sign and the amount is being credited to your company account, I bet you will have to pay back. If not, your collateral will be seized. There are different types of collateral which you can use to obtain facility from the bank, from any financial institute. Number one, we have a landed property, we have the plant and machineries, we have stock and bond. These are conventional collaterals. We have a movable collateral, which is auto, that's vehicle, as in the car. Then we have livestock, we have inventories, and we have farm produce. These are called movable collateral. Now, let's talk of eligibility of loans. To be considered for a loan, the borrower must, number one, have a bank account. Number two, be mentally fit. Number three, be of a legal age. Number four, be credible. Number five, have a good credit rating. Number six, know your customer requirements. Yeah, that's the KYC. Okay. Number seven, be able to repay the loan. This is the main thing. This is the main thing. Now, let's talk about things to consider when obtaining a loan or a facility from the bank. There are so many things for you to consider before obtaining a facility from the bank. You can't just wake up one morning and say, then let me go and collect facility from the bank, without having a laid down plan on what you want to use the facility for, and how you want to utilize the facility, and how you want to pay back. Because obtaining any facility from bank, it is never interest free. The bank will charge interest for every facility granted to any customer. These are the things you need to put into consideration before thinking of obtaining any facility from bank. Number one, an individual or company should consider the purpose of the facility. Yes, you should be able to consider what you want to use this facility for. Two, the amount required for the facility. You can't just wake up and say, I need 20 million. or you have a project you want to establish, you have a project you want to put in money in, and you need 100 million. You go to the bank and tell them to give you 150 million. It's not done. What will you use the 50 million for? If the 50 million sits in your account for 30 days without using, the bank will still charge their interest. So it is better you know the required amount of the loan you want to obtain before approaching the bank for it. Number 3, the ability to pay the principal and interest over the repayment period. Number 4, you also need to consider the financial institution to approach for the loan. It's not every financial institution you approach because of interest rates. Let me give you this tip. It is not every financial institution that you need to approach when you want to obtain a facility because of interest rates. Have that at the back of your mind. Then you also have to put into consideration the collateral for the loan. You need to put your collaterals together. Also, the last and not the least, the terms and condition of the loan, which is very, very important. Okay, now let's talk about the defaulters and the consequences of not repaying a loan which is granted to a borrower. Where a borrower fails to meet the terms and conditions of the loan, the following are the consequences of the default. Number 1, loss of collateral. The bank tends to seize the collateral of the borrower, and when it's seized, most time they sell off the property and use it to pay off the loan. If there is any balance from the sales of the property, they will have to reimburse the customer some the remaining amount. If not, well, I don't know, but I think they tend to waive some amounts for the customer depending on the agreement you have. Number 2, naming and shaming. This one, everybody knows this one, because of the current thing happening with all these loan apps we have online nowadays. When you default, they'll have to call you out, call your name, call people you know, or post an obituary of a living person because you are defaulting. But this is not applicable to commercial banks. No, it's never applicable to commercial banks because commercial banks don't tend to do all this. The only people that do this naming and shaming is the loan apps that we have currently online in Nigeria. Then number 3, poor credit rating. Yeah, of course, the credit score will go down, which whenever you want to apply for loan in another bank from another bank, they would have to some, not all, some will go check your credit rating and see if they will be able to give you a loan. Then number 5, be prosecuted under the law. Fine. I don't really know about this. I've not seen someone who have been persecuted under the law for owing a bank. I've not seen. Let me not see what I have not seen. Then the last but not the least is loss of business. Well, it's advisable, number 1, to take what you can afford to pay back. Avoid default. Avoid default. Repayment of loans. When a borrower fulfills all the requirements of the loan agreement and repays all the principal and interest and all charges of the loan, the borrower is set to be discharged of all liabilities and the loan considered repaid. All collaterals pledged will be released back to the borrower. On the other hand, if the borrower is unable to meet the requirements obligation, the borrower can request for the loan to be restructured. The loan agreement can run under an adjustment terms. If a borrower cannot or is not able to meet up with the repayment of the loan, yes, you can ask for a restructure. You can ask the bank, you can go sit with the bank and request for them to restructure the loan. And once they restructure, make sure you try your possible best to pay back the loan. Okay, now I think I should end this video here in order not to make this video too long. I think let me end it here and do a part 2. And in that part 2, be explaining frequent terms used on loans offer letters. I'll be explaining that. Thank you for watching. Please like, subscribe to my channel. See you on my next video. Bye.